brand new week ahead. Very good morning. Today will be the 6th of October 2025. So as usual, before we kickstart today's gist of the daily dose, let's have a quick look at the disclaimer first. Right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and it's not investment advice. Past information is not representative of the future results. All right, so as usual, before we jump straight into today's full suite of daily dose of market insights, which cover all the intraday technical outlook of the 12 cross-asset instruments that we cover on the frequent basis, let's have a recap what has taken shape over the weekend and as well as in today's early Asia session and also last Friday US session in terms of key economic data releases / events and as well as their impact on the respective movements of the broad-based cross-asset classes. So let's start with last Friday first, right? So on last Friday, we do have a key Tier 1 US economic data release, which is the ISM Services PMI data. Right, so let me share with you guys over here. Right, so the ISM Services PMI data came in rather weaker, I would say. So despite the fact that we know that PMI data, anything that is above 50 is considered expansion, anything that's below 50 is considered contraction. And why ISM Services data is important for ISM Services PMI data for important for US, because US GDP growth primarily is driven by services sector activities, and 3/4 of US GDP growth is driven by these services activities since about 20 over years ago. Hence, any sign of deterioration in services activities may indicate potential economic slowdown in the US, which also increases the odds of the US Federal Reserve of doing much more in terms of monetary policy easing. That actually imply a cap on US dollar strength and as well as a continuation of that bullish trend that we see so far in the major US stock indices, because the stock market thrive on additional liquidity for the bulls to keep running up until a point that when the market participants realize that there are much more economic decline versus negative impact of economic slowdown that offset the additional marginal benefits of liquidity added into the stock market, but we have not reached that stage yet at this point in time. So let's take a look at the ISM Services PMI for the US for the month of September. So it came in at 50, way below what market is, slightly below what market is expecting, pardon me, at 51.7, and also below the previous month print of 52, which was in August. So if you look at the trend of the ISM Services PMI data, let me very quickly open up the chart for you guys to see. That means what it means that it tells us that the rate of expansion for the services activity in the US has started to decline. And ISM Services PMI data is considered as a leading economic indicator because it's a soft data, which is survey based rather than hard data that's been recorded in the past. So survey based, ISM set up a poll of questions to poll the respective key correspondent in the services industry in the US in terms of their business outlook, their confidence in the US economy, and etc. etc. All right. So if you look at the trend of the 10-year services PMI data, is slowly inching a series of lower high and attempt to actually potentially break down this major support that has been formed since December 2022 over here. Right. So indicating potential deterioration in the services activity or the services sector in the US that actually keep Fed rate cut bets alive. So if you look at the CME Fed Watch 2 over here, we are still looking at a very high chance of the second interest rate cut for 2025 to come in at the end of this month, which is the next FOMC meeting on the 29th of October. Okay, give me a minute. Okay, so yeah, on the 29th of October. So market participants in the Fed Funds futures market, that means the Fed Funds Futures traders trading price action, as being compiled by the CME Fed Watch tool, indicate a high chance of 97% that the Fed may do another 25 basis point cut on the 29th of October to bring the Fed funds rate down lower to 3.75% to 4%. And if you look at the aggregated tab over here, that indicates the probability of future FOMC meeting down the calendar ahead. Market participants also assigning a high chance of 85%, a slight dip from 90% odds a day before Friday, which is on Thursday, but still relatively high chance of 85% that the Fed will do another third cut for this year to bring it down by 25 basis point lower to 3.5% to 3.75% in the last meeting of 2025, which is the 10th of December 2025 FOMC meeting. So net overall, the Fed Funds Futures traders are still expecting a much more dovish Fed going forward. So that also supports the ongoing US US stock market bullish movement. So on Friday, very interestingly, we see a mixed performance, but overall, I still consider that the bullish trend still remains intact for the SPX and the Nasdaq 100. Despite the SPX and the Nasdaq 100 on last Friday underperformed, the SPX closed almost unchanged. The Nasdaq 100 was down negative 0.4%. Later I'll share you what causes this underperformance of the Nasdaq. It's due to one particular company that is riding on the forefront of this AI boom over here. And we know that the Nasdaq 100 is heavily weighted to mega cap technology stocks that in the last 2 years, especially this year, has been driven by this AI productivity boom. And the outperformance over here was the Dow Jones and the Russell 2000, which is up 0.5% and 0.7%. So this outperformance of this Dow Jones and Russell 2000 is considered positive for the US stock market. We know that the participation is not totally centered on the mega cap technology stock, and it starts to spread out to the rest of the market, which is the technology stock has lesser weightage in the Dow Jones Industrial Average, and the Russell 2000 comprises of a small cap company that tends to benefit from a low interest rate environment, given that their business model are much more, or their balance sheets are much more highly levered as compared to those big cap technology component stocks. So the Russell 2000 up 0.7%. And what's interesting over here is that both the Russell 2000 and the Dow Jones Industrial Average managed to print fresh all-time intraday high on last Friday. This is the Russell 2000 over here, and this is the Dow Jones Industrial Average. Right, also managed to print fresh all-time high on last Friday. So the reason that causes the underperformance of the SPX and the Nasdaq 100 on last Friday was due to this negative news flow from Palantir. So Palantir is also one of the beneficiary of this AI productivity boom that has been seen since the start of this year, since 2 years ago, and much more pronounced since the start of this year. So there was a report stating that Palantir Technologies product, one of the products over here, stating that it actually has problems with this product suite over here. So Palantir Technology stocks fell on Friday following a report that a battlefield communication system it worked on with Arduri Industry was seriously flawed. All right, due to some reports coming out from the US Army over here. So because of this negative news flow that causes Palantir stock price to actually tumble on last Friday, and that created a negative feedback loop throughout the technology sector, and as well as the communication services sector in the S&P 500. So Palantir is here over here. So Palantir is actually part of this technology industry, or part of this, what you call it, software infrastructure industry within the technology sector. Palantir stock was down negative 7.5% on last Friday, hence creating a negative feedback loop into the technology sector and spill over to the communication services sector as well, because both of these two sectors is riding on this AI boom, high productivity bullish narrative since the start of this year. So any one of the market leading AI related major stocks has a negative feedback loop. Easily it could trigger down a negative impact into the rest of this AI boom narrative stocks as well, even though they are not in the same they do not do the same services. All right, so that's how sentiment works. Okay, then so to the US, for the FX market over here. So if you look at the FX market, because of this ongoing rising bets by the Fed funds futures that I share with you guys. On Friday, the US dollar index closed negative 0.15% over here, negative 0.15%, way below last week high of 98.13. So, but however, in today's Asia session, the dollar index gap up. So this gap up in the dollar index is only caused by one particular major currency, which is the Japanese yen. So why do I say that? So you look at the Japanese yen over here, there's this huge K-shaped performance. So the dollar is only strong against the Japanese yen right now as you are speaking. This is a 5-day rolling performance of the dollar against the major currency. So the dollar is spiking up against the yen, now up 0.95% from a 5-day rolling performance, whereas the rest of the other dollar pair is showing lackluster performance. And this has been more pronounced since the start of today's Asia session. So this is the 1-day rolling performance, taking into account of the start of today's Asia session, where the dollar yen continues to actually do this K-shaped recovery over here. So in fact, the dollar yen today actually gap up because why this gap up was so pronounced that causes this K-shaped performance was the conclusion of last Sunday internal LDP leadership election. So LDP is the ruling political party in the Japanese in Japanese politics right now. So we know in the last 3 weeks, the current Japanese Prime Minister resigned. So on Saturday, the LDP members has this internal voting to select the new LDP leader, which eventually will be the new Japanese PM after very likelihood the parliamentary members, which consists of other opposition party as well, will potentially vote for this new LDP leader. So that causes the dollar yen to actually spike up. So this new leader is Takachi over here. So Takachi, based on her previous public speeches over here, she tends to be more of promoting previous Japan PM Abe policy. That means a very aggressive fiscal stimulus measures that encourages more tax cuts and consumer tax cuts and business tax cuts over here. So that, and also she also advocate of a less hawkish Bank of Japan over here. That means she is not in favor of Bank of Japan to actually continue rising interest rate, because don't forget, since 2 years ago, the Bank of Japan has started to slowly withdraw its massive monetary policy stimulus in the Japanese economy, and as well as do not want to have any more of a zero rate environment for the Japanese economy. It slowly, gradually move up the ladder. That means gradually increasing Japanese interest rate on a very gradual basis. So that was the stance of Bank of Japan 2 years ago. So with this Takachi win on last Saturday, that actually causes the dollar yen to spike up because of her previous public speeches that she is not in favor of Bank of Japan gradually increasing interest rate. But however, yes, despite the fact that the dollar yen spike up, but we continue to see the Japanese JGB yield also continues to actually rise up as well over here. So that causes the so-called the yield spread. Let me share with you guys over here. Okay, the yield spread between the benchmark treasury yield and the JGB yield. That means this, the top of it is the benchmark between the 10-year US treasury yield minus the 10-year JGB yield, continues to face downside pressure since January this year over here. So the 10-year JGB yield minus the 10-year treasury yield minus the 10-year JGB yield now is still going to test this major support at 2.47%. But the shorter term tenure that is much more in line with monetary policies stances between the two countries, or US and Japan. So the 2-year treasury yield minus of the 2-year JGB yield continues to inch downwards after the bearish breakdown of a 2.9% major support level previously on 11 of in the mid of August this year. So with this benchmark yield spread between the US Treasury yield minus of the JGB yield continues to inch downward, that could also cap further dollar yen strength going forward. All right, so later I'll share with you the technical chart of the dollar yen. Where is it right now? Even though despite this morning near jerk reaction due to the way you call it, the new potential Japanese PM that has been kind of announced on last Saturday, where she previously made some comments where she does not like BOJ to gradually increase interest rates. So given her staunch fiscal stimulus advocate over here, that actually causes the Japanese Nikkei 225 continues to rally. So the Nikkei 225 today's gap up by close to 4.51% as we are speaking right now, hitting above the fresh all-time high and clearing above the hitting a fresh all-time high today and clearing above the 47,000 psychological level. Still recall that in my previous daily dose, the Nikkei 225 or the Japan 225 was one of my chart of the day, and it continues to stage that bullish reversal in line with our technical analysis expectation that we highlighted last week. So later I'll share with you what are the key levels to watch out for today's, all right, over here. And also in today's Asia session, we see oil prices recovering slightly over here. So if you look at the oil price right now for the West Texas crude oil, very quickly, let me scroll down my watch list. So the West Texas crude oil is up by 1.7%. It gap up today. So this gap up was also due to a key risk event that took shape on Sunday, which is yesterday, where the OPEC Plus member agreed to continues to do a production hike for the month of November. So, but however, that reduced the fear of a massive production hike. So early at the start of last week, there was media reports stating that OPEC Plus might do a 500K production hike for the month of November, but instead they decided to do a modest production hike of only 137K barrels per day increment starting for November, maintaining this same pace of modest production hike that was previously announced for the month of October. So that reduced the fear of a massive supply glut in the oil market, thereby causing oil prices to rise as we are speaking right now. But however, oil prices, the West Texas crude oil still remains below a key short-term pivotal resistance level or zone that I will share with you guys later in my second segment of the daily dose over here. So now very quickly, let us now move on to the second segment of the daily dose, which is the intraday technical outlook segment. All right, so before that, let me expand my screen over here. Give me 1 second. Yeah, I believe that the screen should be working. Should be clear. Okay, so let us start with the FX market first, starting with the euro dollar over here. So the euro dollar in today's Asia session at the start at 6 a.m. Singapore time, it gapped down due to the strength in the Japanese yen over here. But however, after that, we start to see a U-shape, a kind of a minor V-shaped recovery over here at the 7 a.m. mark Singapore time at around the 1.1706 level. So still no change on the euro dollar in terms of key levels to watch and in terms of the trend biasness. So still remains on a potential bullish bias phase, but key levels remain the same. Medium short-term pivotal support will be at 116.80 over here that got tested on last Thursday and managed to shape that V-shaped recovery right above this key element of a 50-day moving average, where price action managed to reintegrate above it on the 26th of September since. But however, it has a stubborn intermediate resistance that can't break out above it since 30th of September, which is the end of September at 117.60. So this 117.60 will be like my upside trigger level. So for today, first resistance level to watch will be at 117.60, which is very crucial. A breakout above this level will increase the odds of a short-term minor impulsive bullish up move sequence to come into the euro dollar. For the next intermediate resistance will be at 118.20, as one positive element that it managed to actually continues to trade above the 50-day moving average after that bullish breakout on this 29th of September, breaking above the former minor descending channel resistance level. All right, previously that I drew from 17th of September that was the ex-post FOMC meeting at the point in time. Only a bearish breakdown below 116.80 will invalidate that bullish slash recovery scenario for the euro dollar to see another round of minor corrective decline sequence unfolding, revisiting or exposing the next near-term support zone at 116.30/116.50, which is the minor swing low of 4th of September and 2nd of September. So that's for the euro dollar. Next up will be the sterling pound. So the sterling pound continues to trap within this range over here. It hasn't broken back above the 50-day moving average, whereas compared to the euro dollar, where it managed still to trade above the 50-day moving average since last Thursday. So with the failure to trade back above the 50-day moving average for the sterling dollar, I will be not having a bullish stance on the sterling dollar versus the euro dollar. Instead, I will maintain the neutrality stance of the euro dollar. It remains the neutrality stance on the sterling dollar, pardon me, between 135.10, 135.35, which is the 20-day moving average, I think, as an intermediate resistance level as well. And the lower limit of this neutrality zone on the sterling dollar will be at 133.90. All right, so that's for the sterling dollar. Next up will be the Australia dollar over here. So the Australia dollar in today's Asia session, it gapped down, but this gap down managed to find support right exactly above that 65.75 pivotal support that we highlighted on last Friday, or where it managed to did this previous bullish minor bullish reversal as well. So this 65.75 will be a very crucial near-term support level on the Aussie dollar. Hence, that is my short-term pivotal support for today as well. So still maintain that bullish slash recovery scenario on the Aussie dollar after hitting that 26th of September swing low area of 65.30, 65.20. So now en route, it may start to do a start of a new minor bullish impulsive up move sequence, but the upside trigger it got to clear, or the intermediate resistance got to clear, will be at 66.20, where it managed to be a stubborn resistance last week. So this will be my upside trigger level, 66.20. A breakout above 66.20 increase the odds of this fresh new minor impulsive up move sequence as it continues to inch upwards towards the upper limit of that range upper boundary at the 67 figure level. Right, so above 66.20 may potentially take us up higher today at 66.55. Only a bearish breakdown below 65.75 will invalidate today's bullish slash recovery scenario to see the price action of the Aussie dollar dropping down further to revisit the 50-day moving average, acting as the next intermediate support level, or confluencing with the next intermediate support level at 65.45 over here. So still no change, maintaining that bullish bias on the Aussie dollar with the pivotal support at 65.75, upside trigger level 66.20. Now, with the very interesting dollar yen over here. So before we jump into the intraday chart of the dollar yen, so the dollar yen gap up back above the 20 and the 50-day moving average again, and as well as now hovering at the medium-term pivotal resistance that previously was in place after that failure bullish breakout meter rise on the 1st of August due to the rather surprisingly downside revision of that non-farm payroll at that point, non-farm payroll release at that point in time. So now it's at the 149.90 pivotal resistance level over here. So with that, if you were to look at the intraday chart right now over here, so given the fact that it's now hovering at the 149.90 level, so the upper limit of this ascending range configuration is at the 150 figure level over here. So let me put a bit of access slash 150 figure level. Right, so given the fact that it's now back into the upper limit of this ascending range configuration that is still in play since the 22nd of April low. So let's go to the daily time frame chart. So this is the ascending range configuration that I'm talking about since the low of 22nd of April, depicted by these two gray lines of the upper boundary and the lower boundary. So with that, I will still have that bearish bias over here. Okay, the bearish bias so far. So the first support level to watch out for today will be the high of this intraday Marubozu candlestick where Asia session first opened. now turns into a intermediate pullback support level at 14940. So only a breakdown below 14940 may see a deeper minor corrective pullback in the first step to inch down towards this gap up support level. All right, this whole gap up support level over here at 14860/90. Below it, take us down to the lower limits of this gap up at 14780/14810. But however, if we start to see a continue of a squeeze up and the hourly close above 150 figure level, then potentially this movement will continue to squeeze up for today, at least on the intraday basis. Next resistance level to watch will be 15045 on the intraday basis. Further upwards will be the 3rd of March and 28th of March 2025 swing high area at 15115, 15130 on the intraday basis. So continue to watch this price action on the dollar yen, because the medium pivotal support level tends to be we need to have a daily level to see where does it close today, which is very important. So if we start to see, yes, intraday movement around the 1490, 150 figure level, but it managed to close below it, that is indicating that the some form of bearish pressure still remains intact on the dollar yen. Right, and the reason why the dollar yen may still face some form of bearish pressure is because of the yield spread that I shared with you guys earlier on, where the 10-year Treasury yield minus the 10-year JGB yield still inching downwards, and the 2-year US Treasury yield minus the 2-year JGB yield has previously broken down below a former major support level in early August at 2.9% and still showing this downside pressure going forward as it continues to inch downwards over here. So that could actually help to put a cap on today's spike up of the dollar yen when the European session opens thereafter. All right, so that sum up the outlook of the 4 major US dollar pair. Let us now do the intraday technical outlook on the major stock indices, starting with the Hong Kong 33. So the whole 33 continues to pull back below the major resistance of 27,500. So very quickly recall what is 27,500. So 27,500, if you look at the weekly chart of the Hong Kong 33, which is the CFD index that is in our OANDA platform, representing the Hang Seng index, is in fact the long-term secular descending trend line that is still in play since the fresh all-time high of January 2018, way before the COVID period over here. So right now it's actually acting as a major resistance at 27,500, and also a bunch of Fibo extension cluster level hovering very closely to this graphical resistance level at 27,500, making it a major resistance level to watch for the bulls to actually kickstart off, in order to kickstart a long-term circular multi-year bullish uptrend phase on the Hong Kong 33 CFD index. So last Friday, we do mention that there's this risk of a minor pullback. So this minor pullback has really hit our first support level, which is the former minor swing high area of 17th of September at 26,930 level. Still no change, still using the 26,570 level as my short-term pivotal support level. So that is also the golden 50% retracement of that previous minor impulsive up move sequence from 26th of September low all the way up to last Thursday high, which is the golden ratio at 61.8%. So no change as long as this minor pullback didn't surpass below 26,570, pardon me, a bit of tongue twisting. As long as it didn't surpass below 26,570 pivotal short-term pivotal support on the Hong Kong 33, still maintain that bullish bias for it. So now we have an intermediate resistance level to watch will be today last Friday US session high will be at 27,205. Breakout above 27,205 may see a further push up to test the major resistance level at 27,500 in the first step. Only a bearish breakdown below 26,570 will invalidate today's bullish bias scenario to kickstart another round of deeper minor corrective pullback sequence, exposing the next support level at 26,280 and even 26,060, pardon me, which is the minor swing low area of 23rd of September and 26th of September. So that's for the Hong Kong 33. Next up will be the Japan 225 representing the Nikkei 225. So the Japan 225 continue to clear up a higher high and also managed to do this bullish acceleration movement on the intraday basis by breaking up above this minor or medium-term ascending channel that I drew from the low of 1st of August. Previously was a resistance level, now turns into a intermediate pullback at 47,050. So I'll be using 47,050 to maintain my bullish bias on the Japanese 225 or on the Japan 225 representing the Nikkei 225 over here as it continues to do this bullish acceleration phase. First resistance level to watch will be 48,860 slash 49,070, which is a Fibo extension cluster level, and above it takes up higher towards 50,087, 50,540, which is also a Fibo extension cluster level. Only a bearish breakdown below this tightened short-term pivotal support that I have at 47,050 will see a much more deeper minor corrective pullback sequence unfolding to cover today's gap up back to the lower limit of the gap support at 46,170. So far, yes, the RSI is in the overbought level, but it hasn't flashed out a bearish divergence yet. Right. So that's for the Japan 225. Next up will be the Germany 30. So the Germany 30 continues to shape that pullback as expected on last Friday. Given the fact that it hasn't cleared up above our first resistance level at 24,655, I do not want to tighten my pivotal support to be so tight at this 24,380 level or 380 zone over here. So I will still maintain my pivotal support level at 24,155, 24,090 over here. So still maintain that bullish bias on the Germany 30. Next resistance level to watch will be at this 24,780, which is the 2.618 Fibo extension on this ongoing bullish impulsive up move sequence from the low of 17th of September, and this 24,780 also constitute we call it a Fibo extension level as well, and also slightly above the current all-time high of 24,655 over here. Right, only a bearish breakdown below 24,090 will invalidate today's bullish bias scenario to see a deeper minor corrective decline sequence unfolding, revisiting the 50-day and the 20-day moving average again at 23,900, maximum 23,760. So these are the two next intermediate support level to watch if the short-term pivotal support can't be maintained at 24,155 slash 24,090 for now. All right, so that's for the Germany 30. Next up will be the S&P 500 over here. So the S&P 500 managed to surge into a fresh all-time high on last Friday, and given that it has cleared above the first resistance level at 46,750 slash 46,870, so that will be my pullback support level to watch for today over here. And I could tighten my pivotal support on the US Wall Street 30 that is representing the Dow Jones Industrial Average to a higher level. So this tightened pivotal support will be at this zone here, at this area here, which is 46,420, which is accumulate over here. They put it probably 46,400, which is the minor swing low of last Thursday, right? This last Thursday over here, and also coming very close to this rising 20-day moving average as well. So with that, let me tighten it over here. This will be my short-term pivotal support, a tighten one, 46,400. Okay, 46,400. So this will be the normal support level to watch out for today, 46,040. All right, so let me do something. Next resistance will be 47,340. And let me see if there's a Fibo extension cluster. Yes. Okay, very close to this 47,410. Okay, so there's a Fibo extension cluster level at the next resistance. All right. So after tidying up everything, the US Wall Street 30 bullish movement on last Friday that managed to break its previous all-time high, allow us to shift our pivotal support higher towards this key minor congestion area, which is on last Thursday, that managed to shape this minor V-shaped recovery that kickstart this bullish movement that allow us to break above the previous all-time high on last Friday. So this will be my Titan pivotal support for today on the US Wall Street 30 CFD index, 46,400 level, short-term pivotal support. Maintain that bullish bias for it. Next resistance level to watch in first step, 46,160, followed by 47,160, pardon me, a bit of time to explain. Next resistance level to look out for will be 47,160, followed by 47,340 slash 47,410, which is a Fibo extension cluster level, which I did earlier on for you guys to see. However, only a bearish breakdown below 46,400 Titan short-term pivotal continuation of this bullish impulsive upmove sequence to kickstart a minor corrective pullback scenario, a deeper one, to expose the next intermediate support level at 46,040 next. So that's for the US Wall Street 30. Next up will be the S&P 500. So the S&P 500 continues to hover around the first resistance level after it being met on last Friday to come maintain that momentum and push down. So given that it can't clear above properly at 6,745, so still no change, still maintain that bullish bias scenario at the last Friday pivotal support at 6,690. Unless we have a clear hourly close above 6,745, then I could tighten my pivotal support slightly higher to last Friday intraday low at 6,715. So now pivotal support remains the same, 6,690. After 6,745, the next intermediate resistance level to watch out for on the intraday basis will be 6,800, which is a Fibo extension cluster level. Only a bearish breakdown below 6,690 will invalidate today's bullish acceleration scenario on the SPX 500 to seek out a deeper minor corrective pullback sequence towards 6,650, which is the minor swing low area of 1st of October, now confluencing with the rising 20-day moving average as well. All right, so still no change, maintain that pivotal support level at 6,690 unless we have a clear breakout above 6,745, hourly close above it, then I will tighten my pivotal support to last Friday minor swing low at 6,715. So that's for the SPX. Very similar on the Nasdaq 100 as well. So the Nasdaq 100 managed to do a pullback, and this pullback managed to store right exactly at our pivotal support zone that we had on last Friday. So still no change, still maintaining that 24,710, 24,620 short-term pivotal support level. Maintain that bullish bias on the Nasdaq 100 for it to en route towards today's resistance level to watch out for will be 25,090. Above it, potentially see the bullish acceleration scenario coming back into the picture to hit 25,370 next, which is our next intermediate resistance, which is being confirmed by the 0.618 Fibo extension taken from the low of 2nd of September. Only a bearish breakdown below 24,620 will invalidate today's bullish bias on the Nasdaq 100 to seek out a deeper minor corrective pullback sequence, exposing the next near-term support level at 24,380, which correspond to the rising 20-day moving average over here. So that sum up the intraday technical outlook on all the major stock indices. So let us now proceed to the commodities market, starting with the gold XAU/USD. So for gold XAU/USD, as you could see over here, it managed to continues to inch a higher high and higher low and cleared above our previous first resistance level at 3,892 slash 3,907, and now heating up towards the next resistance level at 3,938, 3,942, 3,980, 3,985, which is a bunch of Fibo extension cluster level, and also the upper limit of this minor ascending channel that is still in play from the low of 22nd of August 2025. So with that, I could tighten my pivotal support level for today over here. So tighten it to that previous all-time high or the previous swing high area over here. Okay, so it would be a zone. Okay, taking into account of this area here, the median line. Okay, so this will be my zone. 3,892 slash 3,874. Okay, so just to confirm everything, 3,892, 3,874. Yes. So this will be my Titan pivotal support zone for today. Any form of any pullback that managed to hold within this zone at 3,892, 3,874 for Gold XAU slash USD. This bullish impulsive upmove sequence is likely to resume to expose the next two intermediate resistance zone that we highlight earlier, 3,938, 3,942, 3,980, 3,985. Only a bearish breakdown below 3,874 will invalidate the bullish acceleration scenarios to see a minor corrective pullback sequence unfolding again back towards the lower limit of this minor ascending channel, which is so confluence with the minor swing low of 2nd of October at 3,828. So that's for Gold XAU slash USD, still maintaining that bullish bias. Lastly will be the West Texas crude oil over here. So we know that West Texas crude oil today, there was a gap up because of that less fuelful production increase for the month of November, lower than the earlier anticipated pace of 500k barrels added per day. So it gap up. So now it actually come very close to this pivotal resistance zone that we highlighted earlier on Friday, which is 62.60 slash 63.30. We also confluence with the downward sloping 20-day moving average. So as long as this resistance zone is not surpassed to the upside, potentially there could be another round of bearish reversal on the intraday basis taking shape on the West Texas oil. So first support level to watch, it will be the 15/13 May 2025 swing low at 60.55, 60.10 level. And this zone of support zone is very important as well because it's also a medium term ascending trend line that managed to keep the bears in check since the low of 9th of April 2025 at 55.20. This minor ascending trend line over here, which is at 60.55. However, only a bullish breakout above the 20-day moving average, which is at 63.30, that will invalidate the minor bearish reversal scenario for West Texas oil to see a further squeeze up towards 64.55 slash 64.90 next, which is corresponding towards the 50-day moving which confluence with the 50-day moving average as well. So that sum up today's intraday technical outlook on all the broad-based cross asset classes. Now let us now proceed to the key economic data to watch out for or events to watch out for today. So let's take a look at the economic calendar over here. So today will be Monday over here on the 6th of October. So continue to look out for the status of the US government shutdown. So the US government continues to remain shut over here as the Democrats refuse to pass a spending bill that to lift this shutdown. All right, so things are still getting pretty fusty between the Republicans and the Democrats. So continue to watch this front as new development may take shape today. So key events to look out for, we have some ECB officials speaking today at 3:15 p.m. ECB governors will be speaking, followed by 4 p.m. ECB Lane will be speaking. So their speeches may influence the intraday movement of the euro dollar and the euro crosses. And we have one key Eurozone economic data to chew on later at 5 p.m. Singapore time. Retail sales for Eurozone for the month of August that could influence the euro crosses, the euro dollar, and as well as the Germany 30 CFD index. And thereafter will be a quiet US session, followed by 1 a.m. Singapore time Tuesday, which is 7th of October, ECB President Lagarde will be speaking, followed by 1:30 a.m. Bank of England Governor Bentley will be speaking. Also, that could actually influence the sterling dollar and the sterling crosses. And before the start of our daily dose tomorrow at 7 October, 11 a.m. Singapore time, we have a household spending data out from Japan at 7:30 a.m. All right. So market participants will closely watch this data as well. So if household spending continues to improve over here, so market is expecting it slightly lower on a year-on-year basis. Previous month of July it was 1.4%. This time around they pencil it 1.2%. So anything that's above 1.2% represent the Japanese consumer are spending. So that could actually be another so-called additional we call it impulses for the Bank of Japan to continue to tinker with its gradually increasing interest rate monetary policy and keep the hopes of at least a 25 basis point hike by Bank of Japan before 2025 ends. All right, over here. And we do have also Australia Westpac consumer confidence data out at 8:30 a.m. Singapore time. All right, so previously it was at negative 3.1%, and this time around the forecast by Trading Economics expect it to be a positive turnaround to 3.2%, and that could further improve the Aussie dollar as well. Right, something to look out for at 8:30 a.m. Singapore time tomorrow. So that it will be Westpac consumer confidence for Australia for the month of October. So with that, that sum up today daily dose of market insights. I'm Kelvin here signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.